The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
And welcome back to another episode of The Credit Authority. Once again, I am your host, Rhonda Kulch, and I am so glad that you joined us today. We always want to start our segment by thanking our sponsors, so thank you so much to Equity First. If you are experiencing credit and or financial challenges, feel free to reach out to any one of their trained professionals. They are bilingual, nationwide, and waiting for your call. They can be reached at 631-714-4822. And to get today's show started, we have my friend Peter Pescatore, the COO of Jet Direct Mortgage. How are you?
Good. Good morning. How you doing?
Good. So, you guys have been a huge supporter for years, right?
Sure.
I could remember even pre-pandemic having you guys on the show, always doing things, keeping yourself active in the community. So we know right now the market is insane. Interest rates are rising. Inventory has been stagnant. But I also know that you've been doing a lot of things creative in the market. So how are you keeping yourself and your loan officers busy?
Yeah, look, it's a market that no one's ever seen, and really thinking about the economic policy and what's going on around us. No expert can say what's happened or what's going to happen because we're in new territory. So for us, it's really just going back to traditional methods, helping people with credit repair, finding unique products for first-time home buyers, down payment assistance programs that are going to help with, the interest rates are gone from 2 to 3 to now up to, middle 6s or even low 7% range. So, we're trying to find creative ways to basically help those borrowers who've gotten hit with higher payments with maybe some down payment assistance, or if you get your credit repair from, let's say, taking your credit from a 660 to a 680, 700, what happens is in the background, those hits for the rates become lower. So your interest rate that might be 7% now might be 6.875 or 6.5, which obviously lowers the payment for them.
And traditionally, we'll just say maybe 20 years ago, the difference of an eighth in an interest rate was not a big deal. Sure. But with the combination of purchase prices on Long Island being so high, and then the increase in taxes and the cost of insurance, that 1/8 could be the difference of several $100s a month. Absolutely.
I had one deal yesterday I was looking at where it was an investment property from about a year and a half ago, and one of my former clients wanted to take out additional cash. They're in a 3.5% interest rate right now. I'd have to give them a 7 1/8. The difference in the payment along with the cash was an additional $2,000 a month. So when you're talking about even an eighth or a quarter of the interest rate, it can be several $100s. And from what the disparity of the interest rates were from last February, March till a year ago today, you're talking about a huge difference.
We've been speaking to clients, and of course, as you know, I have clients that call me that are having financial challenges. And they'll say to me, do you think I should refinance? And I just had a client the other day, and I said, I can't recommend a refinance. We're just going to have to be more creative. Sure. And she goes, no, I have equity in my property. I said, you don't understand. I'm not even putting a Band-Aid, on your situation. I'm actually compounding the problem if you think that that's going to be acceptable.
Sure.
One of the things that I know you agree with me on this, the second mortgages, these home equities, they were gone for a really long time.
Yep.
Are you finding that they're back and they're available? Because I'm being told still that there's really no market for it.
There isn't a market. And really the main reason in New York is that in a second mortgage environment, you cannot foreclose as a lender on a second lien. So when it comes to a home equity, when it comes to a second lien position, the lenders don't really want it because they know if, God forbid, something goes wrong, they can't protect their lien position. So they really want the first mortgages. The challenge we're running into with the refinances that you have already is that when somebody's in a 3.5% interest rate, to go back up to 6.75 just to get $20,000, $30,000, $40,000 cash is not costing them $400 a month. It's costing them $1,200 a month. No longer makes sense to take that cash out.
It doesn't. I'm looking at alternatives for my clients. A lot of the people that we serve are self-employed. Yeah. So one of the strategies that we're using right now is to help them build business credit and to transfer personal debt and liability onto the business side.
Yep.
Well, if it's business debt that was taken out in the personal name before people get angry.
Yep.
But we try to be creative. Sure. And it's necessary, I think, also from where you stand, you probably have a decent amount of business owners because Long Island is a plethora of entrepreneurs.
Yeah, no, we see it all the time. There's a good percentage, especially on Long Island with the small business owners. We're pushing what's called a non-QM loan. They're non-traditional loans. They used to be what was called a stated loan back in the
day.
Yeah, back in the day. Got a bad reputation, but the reality is they're kind of different now. They won't give it to anyone other than self-employed borrowers that really, they show cash flow of X, but they report Y because of tax write-off. So they really do make the income. Those products are still available on the non-QM side, so they are good, and they're well within the rates of what's going on now. So if a traditional borrower right now is getting, let's say, 6.875, a non-QM self-employed is going to get maybe 7.5, 7.875. So it's not too much higher than your traditional, products.
But still worth it, because I think you have to leverage. Do you report all your income, or
well, that's the
I want my cake and eat it too, but I don't want to put on the 5 pounds.
Yeah, oh, absolutely. And that's funny. That's the analysis I use all the time. Like, look, go to your CPA and say, okay, for the money that I save in my taxes each year, is it worth it for me to pay 1% higher in the interest rate? And the answer 99.9% of the time is yes.
Understood. How about people that are looking to buy down their interest rate?
It's not a bad idea. Look, points are a viable option depending on what your goals are. And I tell people all the time, the real difference between a loan officer and some of these bigger banks that, they took 5 minutes of training over at blah, 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 Manhattan Bank, compared to a mortgage company, which specializes in just mortgages, that we're trying to look specifically at the product and the needs of the buyers. And what do I mean by that? When you talk about buying down a rate, somebody that's going to stay in the house for 1 or 2 years and plans on upgrading might not be worth to pay those points to get the low rate. It might be better off just paying a par rate, which is the market rate, and paying the extra interest. And then basically in 2 years, when you move, you move. You're not paying those points. Points take time to recapture. Usually the general guideline on points, probably about 3 to 5 years to recapture the payments or the cost of the payment difference.
What about interest onlys? Are those back?
I'm seeing them a little bit. They're not a bad option, but again, you just have to have the right client, the right mindset. If you're going to go on an interest only, understand that principal balance isn't going down. And really, if you're selling it the right way and you have the right savvy client, it's a great product. There's a reason why they created all these products. They just have to be sold to the right person. I remember back in the early 2000s, they had you probably remember the pick of payments.
Yeah.
You basically chose every month what payment you want to make.
That's right.
You made a negative amortization payment, which means your balance of your loan actually went up. You had an interest only, which means your balance stayed the same. You had a 15-year payment, 30-year payment. Unfortunately, it was being sold to people that really didn't understand the product, and they were taking the negative amortization payment, not realizing 2, 3, 4 years later that my $200,000 loan, now I owed $285, $290.
Yeah.
Quickly snowballs.
Let's talk about a very sensitive topic. So again, we know the market is off and loan officers are scattering, and you have people who are trying to figure out whether they should stay in the market or whether they should find additional employment. What are you saying to the loan officers, even at Jet Direct, that may be finding it challenging right now because of the market?
I will tell you this. The top 5% of my earners are making less, but they're still active and they're still seeing deals. So I think the real message that I'm sending to my loan officers is you have to hunt and gather. You have to be out there basically doing radio shows. You have to be out there going to see your realtors. You have to be hunting and gathering, going after different referral sources, and really out there basically putting yourself out there to get more business. If you think of the days of sitting there at a desk and basically that the phones are going to ring is still happening, it's not. When interest rates rise this way, there's still people in the market, and it's still a great market to be in, but you have to be out there working. There's no more sitting on the beach with your cell phone.
And it's funny because you're saying, people sitting behind the desk. Right now, I think a majority of the people in the industry are really self-sourcing. Yep. Right? They're not sitting there. They're not these big companies with gigantic marketing campaigns.
Sure.
What are you telling your loan officers when they're challenged with having the conversation of a client saying, well, I just noticed that on, when I was searching the internet, this company is offering me X?
Sure. Look, the reality is basically most banks are going to be within range when it comes to rate, when it comes to fees. And the nice part about basically some of the things that happened years ago with the bad mortgages that were from 08, 09 is that they put in regulations.
There's been a correction.
Yeah, a couple things. So the CFPB, which is really the oversight for all loans and mortgages, put in place what's called an LE, a loan estimate. And what that does is basically lets consumers do an apples to apples comparison. And what I do all the time is if someone says something that just doesn't sound right, and I get it all the time, hey, Pete, I got offered a 5% interest rate. I'm like, well, there hasn't been 5% interest rate since July or August. We're in 6.5%, 7% range. So I'll ask them, go get an LE from the lender, and we compare. We take a look and we try to do a real analysis, say, look, maybe the other lender is better. It's possible. It's always possible based on their qualifications. They are, but the reality is if they're saying something that's too good to be true, at least this lets us say, okay, look, if they're not willing to give you that estimate, if they're not willing to lock in the rate, be a little skeptical.
How are you handling clients that are coming to you for pre-approvals?
We're happy to lock them in, usually not on a pre-approval basis because the reality is they don't have a contract, they're not ready. But unlike a lot of the banks, we will lock them day one. As soon as they put an application in, we can give them a free 30-day lock.
How long is it taking to get through underwriting?
Oh, underwriting these days is 1 or 2 days.
Oh,
It's
stop.
quick. Yeah, no, very quick. Yeah.
You heard it here, people. 1 or 2 days. If you are looking to look for a home, refinance, purchase, consider working with my friend, Peter Pescatore over at Jet Direct Mortgage. And Pete, if they want to reach you, how do they get in touch with you?
Yeah, go to our website. It's jetdirectmortgage.com. If you're looking for me, it's /Peter P.
And I think you guys have a cool app too, don't you?
Yeah, we got a mortgage app. We got it all.
Yeah, like we have it all. All right, people, you heard it here first. Consider reaching out to my friends over at Jet Direct Mortgage. If you have any further questions about credit, financial needs, or just need a good referral partner, give us a call. Equity First is waiting for you. 631-714-4822. Stay tuned for our next guest.